Kia ora, and welcome to Friday's Economy Watch, where we follow the economic events and trends that affect New Zealand. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news that is expected that the US will announce reciprocal tariffs, although the phase-in time might be months, to be revealed. This will be seen as the formal start of the global trade war. New Zealand won't be any focus, but it won't be immune. The tariffs will be on goods, but the retaliatory tariffs are likely to come on services where the US runs large surpluses. Both will tend to drive countries away from US influence. Every country is going to learn how to play hardball in a zero-sum struggle. None of this will be good for trade or any sense of cooperation for mutual benefit. Meanwhile, US initial jobless claims came in at 231,000 last week, almost exactly as expected. There are now just under 2.2 million people on these benefits, quite similar to this time last year. And the expected easing in the rise in American producer prices didn't happen in January. They're up 3.5% in December, and that was expected to ease to a 3.2% January rise. But in the end, the pace of cost increases stayed unchanged at 3.5%. Although it is not a key metric, it is more data that will encourage the Fed to hold its settings and put off a rate cut. Tariffs are likely to make matters worse for them too. US household debt pushed on up through $18 trillion at the end of 2024, and new data released today. That is 62% of US GDP, so compared with other countries, not a huge load. In fact, it only rose 3.1% from a year ago, basically keeping pace with inflation. And there was a US Treasury 30-year bond auction earlier today, and that brought a median yield of 4.68%. That compares with the 4.87% at the equivalent event a month ago. Across the Pacific, Japanese producer prices were expected to rise in January from December's 3.9% to 4%. In fact, they came in at 4.2% for the year to January, and a broader-based trend higher. Apart from the pandemic period, it is a 10-year high for them. It may seem an odd economic win, but EU industrial production fell 2% in December. This was marginally more than November's 1.8% drop, but it is very much less than the 3.1% fall expected. It was toughest in Austria, Italy, and Hungary, all countries ruled by right-wing populists. So far, they're not making their countries great again. Container freight rates fell 5% last week to be 118% higher than pre-pandemic levels, but 19% lower than the same time last year. Outbound freight rates from China brought the largest retreats. Bulk cargo rates remained near all-time low levels, but were unchanged over the past week. The US Treasury 10-year yield is now at 4.54% and back down 9 basis points from yesterday at this time. And the price of gold will start today at just under $2,913 an ounce, up $18 from yesterday. And oil prices are down nearly $1.50 at just over $71.50 a barrel in the US, while the international Brent price is now just on $75 a barrel. And the Kiwi dollar is now at 56.5 US cents, up 20 basis points from yesterday. Against the Aussie, we're unchanged at 89.8 Australian cents. Against the euro, we're down 10 basis points at just on 54.2 euro cents. That all means our trade-weighted index starts today at just on 66.7, essentially unchanged from yesterday at this time. And the Bitcoin price starts today at $95,526 and also virtually unchanged from this time yesterday. Volatility over the past 24 hours has been modest at plus or minus 1.5%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston. We'll do this again on Monday.